So what? You're looking to buy a condo? Did you know that on the mortgage side, there is something called a limited condo review versus a full condo review? And why is that important? A full condo review gets into a lot of details that make sure that the buyer is in a good position, that there's not going to be unexpected expenses that fall on them, like future assessments or higher HOA fees that may affect the affordability. So when making an offer on a home, it's really nice to be able to know which route that we're going to have to go on the lending side. A full review means that the lender is going to inquire to the association. They're going to ask things about, is there any pending lawsuits? Is there any structural problems? Any special assessments? Maybe a big project that they're working on. We saw in Florida a couple years ago where an apartment style condo building collapsed and caused injury and fatalities. This has brought a lot more scrutiny to condos due to the aging infrastructure of the condo association. So we want to do a little bit more in depth to make sure that there's no conversations during a board meeting talking about rebar that's rusting or cracking foundations. So the lender is going to collect a full questionnaire that asks about the financial condition, the structural elements, in addition to the 6 months of board meeting minutes to see if there's any active conversations about something that's going on in the community. Look, the lender is investing a lot of money, and they also are working with a buyer that is being qualified for a monthly payment and expense. In both situations, from a lender and a buyer perspective, we want to make sure this project is in good working order before we invest, the buyer buys that property. Catch me for my next video when I talk about appraisal contingencies, finance contingencies, and of course the condo contingency. Follow me for more.